Sarat Sethi is managing partner and portfolio manager at DCLA. Sarat, it's great to have you. And what is important to you about this? I mean, I think people would say, all right, fine, so I pick up a little bit of a turnaround, but I'd still rather go chase the double in, in Marvell or whatever, based on our conversation with Vivek Arya. I'm curious to hear more.
Well, I think, Kelly, you just hit the nail on the head there. A lot of investors and traders are now moving away from what we think are well-capitalized quality companies to the quick trade, to, hey, why don't I go to the DRAMs? Why don't I go to semiconductors that I'm getting this quick pop in? And as we get more and more news on it, now the China stuff, everything's going up. But our view, and you know us for a long time, we're more longer-term value-oriented compounder investors. And when I look at software that was trading at 20 times cash flow just a year ago is now trading at 10 to 12 times. And really, the earnings are still growing 8 to 10% with almost no debt on their balance sheets. And what's happened is a sassification that semis are going to eat software. The more and more you talk to companies and say, yeah, we might have some issue in terms of seats, but we need the software companies. We need the security. We need the interoperability. All that's still existing. And it's not like the software companies are sitting there idly. They're using AI, they're using engineers to make their products better, whether it's companies like Intuit, Workday, Salesforce, and even other companies like Roper. It's really affecting kind of anything that's affected by, so people will either sell or short the software and go somewhere else.
So are those four names, because you said you have to be selective here, although we've seen, a number of different companies have these really strong bounces on better than feared earnings. Intuit, Workday, Salesforce, Roper, any others you'd put on the list?
Well, those are the four that we actually own in our core portfolio. So, I like those. I like them 40, 50% higher. But I do like them at these points. And, the question is going to be, these are going to be execution stories. They have to deliver. And I do think they have moats around their business, but right now the benefit is more on the other growthier semiconductor and DRAM names, which, are just commodity plays at this point.
What about the cyber area, which has been hit as well by AI disruption fears? It's kind of software, but it's also, something that has to be used to defend against the likes of Mythos and everything else. So I'm curious if you've done any work over there and see any opportunity.
We've looked there. We've already kind of made our bed with these stocks. But I think, the Palo Altos and others are really good companies as well. And they've all been hurt on this. You're going to need cybersecurity. You're going to need a lot of other things that these companies provide. At this point, it's not like any of them are trading above the others, and ServiceNow is now down as well. So I do think you need to be, careful as to where you are, even the cybersecurity names, because they're not all alike. And software names, they're not all alike. So I think finding the ones that have some of the moats around their business, some of the ones that have forward-looking managements, as opposed to those which are just going to sit there and kind of slowly see their cash flow.
Right. Yeah, you don't want. I'm curious, and I know you own still a number of the chip names and exposure there as well. Do you want a piece of the Cerebras IPO?
Not at these valuations. When you look at and we're actually just concerned now about Qualcomm. Qualcomm's our value if there's any value in semiconductors, but that stock's almost doubled in just a few months, and really it's more about, can they provide the chips, even though we know for the next year earnings aren't going to be as strong as the rest of the semiconductors. So today, when you see all these stocks trading in tandem in ETFs with double correlated semiconductors, it kind of gives you pause, especially as a long-term investor, to say, hey, maybe there's a little, I would say, and I can't wait to get the emails, the froth on the semiconductor side.